What is up, YouTube, and welcome back to yet another Fridge Financials video. In today's video, at the request of my followers on After Hours, I'm bringing to you a way in which you can analyze potential stocks, look for discounts. Are they undervalued? Are they overvalued? And we're going to kind of dive into it and give you an example of things and see how this works. So if you're excited for today's video, make sure that you like the video, subscribe to the channel if you've not already done so, and turn the bell notifications for all future uploads as per usual. So as you will see, the market is not open right now. It is Monday at the time of me recording this on President's Day, and market's open tomorrow. So again, I reached out to the After Hours community and said, hey guys, I love to teach finance stuff. I love to look at investing and everything else like that. What can I bring to you and do some research on? And I had quite a few people say, how can I look at a balance sheet? How can I analyze? Do I know if it's overvalued, undervalued, if it's valued just right, and everything else here? So my hope with this spreadsheet here, and again, it is still a work in progress with the spreadsheet here, but I want to kind of show you where I'm working with right now. There's notes throughout everything here, and all it is a matter of being able to pull out the numbers from the balance sheet here. So as you will see, I'm looking at the most active sheets right now. And I wanted to go into, I looked at like Baba was one of them, in video was a prime example that works here. Some of these tickers don't really work well here because they don't have a PE ratio or price to earnings ratio over here. So I don't want to put those ones in. They need to have some sort of data that goes with it. You know, price to earnings, earnings per share, all that stuff is very, very important for these kind of formulas here. So I'm going to pull up Apple here. So we're going to go into the Apple ticker and take a look at some of the important data and look at the financial statement per se, as you'll see. Now, the nice thing about this sheet here is, as you'll see, it has a bunch of important information to pull out from balance sheet here. You can look at it from the trailing 12 months, look at it from last year, you look at it through the quarterly. However it is you want to look at it, it is totally up to you. Now, some data from Yahoo Finance is harder to find. So there's sometimes where I just Google the ticker, someone will say, hey, pull up this, for example, and it'll find it easier in another website like Market Watch is a good one. I think I might pop up better here for some of these. So it's a matter of just kind of doing a little bit of research. You know, just because Yahoo Finance doesn't show it, or maybe it's not easy to find per se, does not mean it's not there. It's there, just probably somewhere else. So I wanted to show an example here with a ticker symbol that's been around for many, many years. And that is Apple. Now, what you'll notice right away is that quite a few things populate in, aka the name, which is obviously is good to know. The current price it is trading at, as you will see, it is trading at that. These are all of the prices before after hours. So do not feel like, oh, it's not after. It updates when the market's open, which right now it's not. The PE ratio, the earnings per share ratio, the current price change, percent change, the beta value, the volume. So all these things here are just some things that are important to know, I think, when you're looking at a stock. Any kind of ticker, any kind of balance sheet, any kind of financials here. So again, I put a little bit of notes here as well. So this is the PE ratio, again, compares the share price to the earnings per share. The higher the PE, the more growth that is expected, aka why, makes sense as to why, because again, Apple's looking at 38.88 as a ratio, which is pretty high. It does color coordinate, which is really cool. Took me a little bit of time to do that as well. So I will be able to give people access to this, and you'll be able to use it yourself. Obviously, you have to make a copy of it, and you can play out the numbers however it is you want. But it does do a little bit of color coordination for some of these things, which is really cool. So again, a good range for PE is usually 20 and 25. That's usually what the S&P 500 trades around, is usually like 20, 25. So higher than that, you're looking at like the yellowish area. I believe if you type in AMD, for example, let's type in AMD. Oh, hang on. Let me do it this way. Oh, I'm gonna put this. So if I do like AMD, for example, it pops in a PE ratio of 112, which is like astronomically high. So, you know, depending on what ticker you put in there, it does show the PE ratio that goes with it. The earnings per share, again, breaking down what that really means is how much money a company makes from each share of stock. And again, so when you buy one share of Apple at $244, you're looking at hopefully getting about $6 back per share is what the company expects you to get as a result back from it. So what you'll see here is you'll watch it kind of break down, pulling some of the numbers here, as you'll see in this balance sheet here. Because again, maybe you don't look at balance sheets. It's important to look at them sometimes, kind of see what's undervalued, overvalued, and everything else, as you'll see. So you have a trailing 12 months, and then you have December 31st, September 30th. they don't have these are all based off of the quarterly reports that they file here. So, you can do it quarterly, you can do annual, whatever it is you want to do, it's up to you. I'm going back to the spreadsheet. You can see also what the beta is at. Now, again, beta of 1 basically means that the stock is moving with the market itself. S&P 500 trades at a beta of 1. Anything higher than that means it's going to trade a little bit more than the S&P 500. Anything below that is going to move a little bit less than the stock market is. So if you're looking for growth companies, you want a little bit of a higher beta, as you will hopefully guess, because you want to kind of move a little bit more than the standard S&P 500. So Apple, Nvidia, Google, all those have a higher beta, not by something crazy. Again, I would put it at like 1.2 to like 2 is pretty much seems like about average for a growth company. If it's like 5 or 7, you're looking at more volatility, which you probably might not want if you're looking at long-term investments. Those kind of things to take a look at as we go. So we're going to start plugging in some data here into the important data as they look at the balance sheet here. So what you'll see is I'm going to go off of December 31st, 2024. That's the last quarterly report they had that came out. And I'm going to fill in, first of all, total revenue. As you will see, total revenue comes in at 124,300,000. Again, this is a matter of just plugging numbers into the spreadsheet here. And what's going to happen is we'll go through all the data at the end and kind of take a look and see, okay, what do I think possibly it is? Now, there's so many different ratios and calculations that are done here. They're not all going to line up perfectly. You're not going to have the stars align. If everything is like green, everything's like hitting the mark where you want it to be, then that's amazing. But chances are you're probably not going to hit a lot of the same things that show it's undervalued or overvalued. But what the point of the spreadsheet is kind of to give you a certain indication as to possibly, does it seem like there's more data leading towards it being undervalued versus overvalued? What are the analysts thinking about? So these are just a bunch of things to consider as you're looking at investing into any kind of company like Apple, for example. So total revenue, as you'll see, again, I'm pulling it from December 31st, 2024. We also have other things. Now, again, it takes a little bit of time. It does give me a little bit of an eyesore sometimes to fill in these numbers, just because it's a lot. It's a lot of information to really pull into play here. We've got operating income, which is down here, coming in at 42832,000. What else do we got here? There's other values here. I've been playing around with this quite a bit, honestly, and it's kind of just giving me a little bit of a headache. And I'll explain everything as we go through here. Interest expense, we're just going to leave that blank, which is, no big deal. I'll just write NA for that one. That's no big deal. I'm not too worried about that one. What else do we have here? We've got net income. Oh, here we go. This is the one I want. I want net income right here. So it's really weird because you have net income common stockholders. You have net income with the drop down here. You have net interest income, which is, again, with interest, with the interest you're paying on it and stuff like that. It's a whole bunch of things going on here. So where was I at? Net income here. And again, apologize if it's not exactly what you're looking for at the moment, and hopefully your eyes don't hurt. So 36330. I'm not typing anything. The only thing that sucks also is 330,000. The only thing that sucks also is that if you're on the wrong, I'm dual screened right now as I'm plugging these numbers in. So it's not going to be perfectly precise in terms of that. Let's see what else we got here. We got total expenses. So we put that one as blank. Earnings before interest and tax is an important thing to have. And again, I like to double check and make sure. See, I scroll down over and over again that I'm not looking at the trailing 12 months, which is TTM. I'm looking at just the quarter. So EBIT, we're looking at 42832,000. Let's see what else we've got here. I think this is everything. I might come back to this honestly again because it just might, see some things here. So that's the income statement. You got balance sheet up here as well. You have cash flow. So this kind of important data kind of takes into a factor a little bit of everything from the income to the balance sheet to the cash flow, all the different things that really make up a good company. Total assets, we're looking at 344,085,000. Perfect. Love it. Plug it right in. We are also looking at, if you go down into the total assets, you have the current assets. So current assets, and again, I'll tell you about all these values mean once you see a spreadsheet populated in here as we go. So you have current assets there, which is good. We've got total liabilities, and as you guessed it, current liabilities would be underneath that. Current liabilities, 144,36365,000. Okay, which is great. So we've got that value all plugged in as well. Total debt, I know for a fact, is down here. So again, a little bit of a boring one. I know I hate to say I'm trying to entertain you guys as much as I possibly can, but it's not that easy sometimes. You have to plug in numbers here. So total debt 9679900. And again, it takes a lot of time to really pull in important values and know where to look for certain things. As in, like, I've done this quite a bit where I know that these come in from the cash flow statement, all that kind of stuff there. Let me see here if we have. So I have shareholders / stockholders. Should be here somewhere. Total equity. I think it's under. Oh, stockholder. There we go. These drop-down menus are crazy sometimes. So stockholders' equity 66758,000. Again, right now you're going to think to yourself, Fridge, what do half of these numbers mean? Great question. You're going to hopefully see it come into fruition as we do more and more. So it's a little bit of a longer video kind of breaking this down. Hopefully you do like the spreadsheet if you do use it yourself. Operating cash flow we've got up here 29935,000. Capital expenditures. We're looking at negative, and you can put the negative with it. Do not feel like you can't. 940,000. That goes in there. Book value per share. Cost of goods, usually I can find on Market Watch easier for whatever reason. Same thing with total equity. I don't know why. So if I go into Apple Financial Report, I'm also going to type in Market Watch. Again, another great website to use is Market Watch. Because it kind of breaks down a little bit of everything that you will see here. So again, cost of goods sold. I'm going to go quarterly. I have to scroll down. Oh, is there even a scroll? Oh, there's a scroll bar down here. Perfect. Scroll bar. We've got. So we've got cost of goods. Cost of goods, $66.03 billion. Now, let me tell you guys this right now. I'm not that good because I believe this one is in millions. This was in thousands. So I have to convert the cost of goods sold, $66.03 billion, into thousands. And honestly, I know I'm a math teacher, but I'm just not feeling that at all. Not on my day off right now that I'm sitting here. So 66.03. And you're probably saying to yourself, Fridge, is really easy conversion. It probably is. I just really don't feel like doing it. 66, so it comes into 6603,000,040 zeros. There we go. Okay, great. Last thing I need, or two things I need: book value per share, which I can get back from. I have to go into here and do it. Hang on, let me go into. There's so many different things you can go here. Book value per share is down here. Book value per share, 4.44. Is that high? Is that low? I have no idea. Let's find out. 4.44. Easy one to remember. Last thing I need is total equity, which I believe also comes from Market Watch. I usually find it really quick on here. For whatever reason, again, I don't know why. I could probably find it on Yahoo Finance. I'm sure you guys could find it as well. Total, I'm looking for total equity. It's like down here, total equity, and it's another billions conversion. Oh, geez, Louise. Woof, such a long video. If you're making it this far in the video so far, thank you so much. Make sure to subscribe to the channel. The channel is doing absolutely amazing wonders. I just gotta plug that in because I have nothing better to do than to wait. So total equity that we are looking at 66.76. And again, I'm going to convert because I'm super lazy. That's just what I do. So 6676 and then 40. I can just remember to add 4 zeros at the end of it, but I don't. And then the expected growth rate. Now, again, I think depending on how you want to look at this, you can look at it from going from a yearly approach, you can look at it from going from a monthly approach potentially. I like to go to the analysis section here and look at the expected. Here's the research. It gives you the average price target, 252, which is not much upside already. But I like to look and see the growth estimates. So next quarter, 7.46%. Next year, 12.23%. So I guess we could use the next year, 12.23%. It does make a little bit of a difference in the calculation here, but you're going to see hopefully as we go. So let's pull this up here. So I'm going to go with, and you have to make it as a decimal and then hit the percent afterwards. Why? I have no idea. All right. let's break this down here, okay? So, in taking a look at all the things we've got here. So, first of all, we have the current ratio here. Current ratio is your assets divided by liabilities. Now, basically what that means is that you should hopefully have, when you have short-term debts, you should have more current assets than liabilities. Right now, Apple, as you can see, has a little bit less than a 1.5 to 3. Basically, you should have more current assets than liabilities, like current short-term ones. As you will see, there is a little bit more liabilities compared to the assets. And the major thing to worry about with this idea of the current ratio is just making sure they're able to pay off debts, because, and it's not going to happen with all companies. Obviously, like Apple's not going to go bankrupt like next week, next month, next year, potentially, unless something crazy happens. But you want to make sure that you have that kind of, short-term capital, available to be able to pay off debts and everything, so your company doesn't go bankrupt and lose all their money. But so this one kind of has it, but I mean, again, you want to have a really good ratio is 1.5 to 3. Like Nvidia is like 3 point something, I think last time I did it on here. So you want to have a really good ratio. That means you have more assets and liabilities. Debt to equity, again, lower than 1. You should have less debt than less equity. Apple has a little bit more debt compared to equity. Now, are they using that money to then put back in the company? I don't really know. It all just kind of depends on what they're doing behind the scenes for it. You can do some more research on that aspect. But this kind of just tells you, again, how much debt the company finances or for operations. A ratio above 2 can be considered risky. Now, again, obviously, Apple is a $3 trillion company, as you can see right here. So is it risky? No. But again, having more debt than having equity available right now, maybe they're restructuring their company a little bit. So that kind of like brings up a flag of being like, oh, interesting. That's how they have that. You also have return on assets. So your return on assets shows how much profit a company earns for every dollar of assets they own. 20% or higher is a good one. They're right now sitting at about 10.5%, which again isn't bad. Again, it's in the green. I marked it as like 10% higher is pretty good. But 20% is really good. So you can look at 10% return on assets, looking at a really good return on equity. So again, how much profit a company generates for each dollar by shareholders. 54% is really, really good. So basically, you put in $1, you're hoping to get a little bit more than half of that back in terms of how much profit they make. Very, very good to see. Free cash flow in this case, again, they have a lot of cash available. I don't know why it says millions though, because I think it just kind of depends on the company itself. I'm just going to get rid of that and make it a lot easier here. But again, having a lot more cash flow is great because, again, able to pay out dividends, able to reinvest it back in the company. Like those kind of things are very, very important to know. Book value, 4.44. Gross margin percent, again, probably made on each dollar of sales. Healthy companies are at 50 to 70%. Apple's not too far away from that. So again, makes sense. They're a very, very long-term standing company. So they are making some good money. Operating margin, very similar. Percent of companies' revenue is left after their expenses. So how much revenue they get after paying out all their labor, their costs, their shippings, everything else of that nature. 34.46%. 10 is average. 20 is excellent. You're looking at 34.46%. So you can see why Apple has become one of the biggest companies in the world is because of things like this. Their operating margin is good. Their net margins are also very, very good as well. Again, pure profit is what you're looking at here, almost 30%. 20 is excellent, and they're looking at 30%, which is absolutely amazing. Now, here's where the things come into play that are very, very interesting. The intrinsic value. Right now, it's valued at 270, based on this formula here, which you can Google online. All these are formulas that you can find online through ChatGPT or through just any Investopedia, whatever. Their intrinsic value is at $274.46. That is the true value of the asset based on the earnings per share, their growth rate, and their PE ratio. So it factors in all these different things here. Again, if the number is above their current stock price, which it is by about like $20 or so, then you might be thinking the stock is a little bit of a discount. So there is still a little bit of room for Apple to grow. And these numbers are basically backing that up by saying, hey, you have a really good return on assets, good return on equity. Your margins are amazing. Like you could really definitely see that. Now, again, is there much growth? Probably not, but again, the beta isn't that much bigger than the actual market. PE ratio is a little bit high. It's not like AMD, which is like 112. So when you have those high PE ratios, you're expecting a very, very high return, hopefully. So a little bit more risk to it. So that's kind of what you're looking at right now. Again, price to book ratio. Again, anything over 1 could be overvalued. This is another factor to consider. It's not guaranteed like, oh, your price to book has to be under 1 or else it's not, otherwise it doesn't work. It can still work in this case. It's just another thing to think about and to read about. And your PEG ratio, price divided by earnings per share, divided by earnings per share growth. Again, trading at a very, very high PEG ratio. But again, these are all different things. These ones and all the ones I've used for growth companies, I have not really seen much in terms of being under 1. So unless these are supposed to be like percentages, which I don't think they are supposed to be. I got to point out that a little bit more with these last two here, but potential upside is 12.21%, give or take. So again, this is a spreadsheet that is currently in the works, still working on it a little bit more, as you will hopefully know. But if you'd like to look at this, feel free. You can have access to it. I can leave the link to it down in the description of the YouTube channel as per usual. So you can have access to it. You can put on the numbers you want. This is a work in progress. Is this the perfect balance sheet for undervalued companies? No, but it does show that Apple still has a little bit of, right now, my understanding is there's a little bit of room to grow. The beta is not too crazy high. The PE ratio is not too crazy high. Their returns are amazing on the assets, on the equity. They have free cash flow available, which is why they pay out dividends. Their margins are amazing. There's a little bit of room to grow still in this company here. So that's kind of what I'm using for the spreadsheet. Now, as I learn more and more, just like you guys are all learning, I'm going to put more into it and kind of refine it, update it, finalize it, and kind of keep going from there. So if you made this from the video, thank you so much for watching. Feel free to like, subscribe, turn on the bell notifications for all future uploads as per usual. I hope you guys enjoyed the spreadsheet and you get some good use out of it. Again, I'll leave it linked down below in the description. All you gotta do is make a copy of it for your own personal use. Play around with it, whatever it is you want. Ask me any questions down below in the comment section. And I hope you guys are making money in the markets, and I will see you in the next video.